Good morning, everybody. I hope you're all having a good holiday season. We're going to talk about a few things today. We're going to talk about propaganda and gossip and how it actually affects the value of stocks, not to be confused with the dividend of a stock. Would like to talk to you a little bit today about what is an ETF versus what is a straight stock. So we got a couple things to cover. I know it's kind of hard to put money back during the holiday season. I would encourage you to try to put, even if it's $5 a week in your account or $10, keep putting something in there every week. Doesn't matter if you can buy a full stock or not this week. If you put $5 in there this week and then another $10 next week, you might be able to buy a $15 stock. Once again, there are no commission fees any longer on online trading, so you can literally buy one stock at a time if that's what you need to do. Every movement forward is a movement forward in your financial future. So let's get right into it. This is a stock line for the last 10 days. You'll notice here on December 2nd, there was a pretty good drop in the market. Then on December 3rd, whoa, another drop in the market. What caused these? Why all of a sudden do we have a couple of 1% drops? Well, if we go over here to this news channels here, we can go back a couple of days ago to December 3rd. I could probably go back further, but I will reiterate this. This is not a political channel. I don't endorse or not endorse any political party or candidate. That's not what I'm about. I'm into trying to learn how to make money with money. As I learn, I like to pass that information along to people out there who uh, might be looking for the same information that I've been looking for a while. So anyway, let's move right into this. Dow drops more than 250 points falling for a third day as Trump hints at a trade deal delay. So nobody said there's actually a trade deal delay. There's hints, there's indicators in what somebody's interpretation of what somebody says is. So because of somebody, people are interpreting what a man said or a person or an entity, a company, all of a sudden, well, we're going to start selling off all of our stock because what if there's a delay in the trade deal? I mean, you can almost match up these stories with the fall of the market. So you can also, it goes the other way as well. I'll show you that here in just a second. But here for 2 days, 3 days there, we see where the news is reporting. And what's funny is it's an interpretation of what somebody says. This can be Democrat or Republican. It can be anybody. It can be a country. It doesn't even have to be a person, but because we publish something in a newspaper or online, well, all of a sudden everybody starts wanting to sell off their stock, and the values drop of each stock price. I don't want you to get confused with the value of a stock price versus the value of the stock with its dividend. Because there's one thing I did notice in the last, say, 3 to 5 days. Even though the stock value, the actual value of the title to the company went down, the dividends did not. They're still paying the same dividend today they paid 10 days ago. And there's a reason for that. Because dividends are based on facts. They're based on income versus debt ratio of the company. They are looking forward to what they project they're going to need to keep the company in operation and maybe make some advancements in it. And after all these numbers are put on paper, they're going through and then they have a profit. Then the CEO, the board of directors, and the executives get together and they divvy up that profit to the shareholders. It's actual and factual information is what dividends are paid out on. It's not because one political party's against the other one and they're all trying to spend time digging up dirt on each other, and they're dealing with other countries and we're speculating on what we think somebody meant when they said something. So I don't do the day trading. I don't do the buy stock and hope I'm buying it low and it's going to go up in price. I buy a stock based on true information that professionals have got together. They've crunched the numbers and they have determined this is the amount of profit, and they're going to split it with the people who are owners of the company. So as you see the stock drop here, you can go to the news. Oh, well, this person said this. U.S.-China trade deal expected before tariff increase report. You can literally watch the news and kind of get an idea of stocks going up and down and da-da-da. And it's like I always say, the dividend investor, when we see red, we want to buy. That's our time to purchase. It's like a blue light special at Kmart. It's like the green light at a stoplight. The red light to us in the stock market, us dividend investors, is a buy indicator. This stock is on sale. I'm going to buy. As a matter of fact, a lot of sale signs will have the word sale in red because it gets your attention. So if you're a dividend investor, you should be, whenever the market goes red, that's when you want to start purchasing a little more aggressively. Buy more of the shares that you have and dollar cost down. The idea is to have the most amount of shares paying dividends for the cheapest amount of money. So it only makes sense that when everybody panics because somebody interpreted something that somebody said and they start selling, that's when we swoop in and start picking up more and more and more shares of the companies that pay us based on their profits. So that's kind of what I wanted to go over a little bit there today. I want to show you one more thing about this. We're going, this is one of my accounts. We go to the positions page of it. These are the positions that I'm holding. You know, a lot of this is in red and all, but if you look over here, the dividend amount, it's always in the black. It's always in the black. Now this one here is it's just a little company I just buy frivolous shares in. It's an energy company. They will start paying a dividend in the future, but it's not a big investment for me. But all the ones that have dividend, no matter whether this number over here is green, the gain or the loss, it doesn't matter because the dividend is always in the black over here. So when you're a dividend investor, really, I don't pay much attention to this day gain, day loss, all that stuff, other than when I see red, I think, I think I'll buy some more of that. It's on sale. It's cheaper now than what I originally bought it in most instances. So the dividend amount does not change based on news stories and propaganda and somebody said this on a news station or anything like that. That's why I like dividend investing. Okay, moving on. Now, the difference between a stock and an ETF, exchange traded fund. So let's go to the exchange traded fund. Let's kind of look. Of course, we're back on Seeking Alpha. It's a very well laid out page. It's easy for people to understand. So O or QYLD is a global X fund. Over here, if you look up a symbol or a company name, if it says ETF after it, that stands for Exchange Traded Fund. So you can actually say that, like, my Roth IRA is a fund. It's not exchange traded because I don't sell shares of what I'm investing in. I simply, it's Dave Lucas's fund. So an exchange traded fund is a accumulation of stocks, and it has a manager. That manager receives a commission or some type of a percentage for running it, for buying and selling stocks within the fund. You can buy this fund on the stock market openly. You can buy shares of it. You can sell it right back out on the open stock market. You don't have to sell it to a specific company or an individual. But so they have daily markers of what the estimated value of the fund is. They have a strategy. That's where they're going to tell you, kind of how they're planning to make money, how they're planning to pay that money out. Now, the one thing you're going to find out about an ETF, exchange traded fund, is they have holdings. A stock, a straight up stock in a company, does not have holdings. It is the holding. So we click on the exchange traded fund holding. Here's where they're going to give you the information about what kind of stocks they have, and usually the top 10 stocks they're invested in. So we look at this ETF. They are 54.77% in technology stock. They are 9.25% in healthcare, 4.37% in communication stock, 1.24% in financials. So you can basically see they've got some defensive, some industrial, some utilities. This gives you the areas in which they are invested and the percentage of those areas that they invest in. If you'll go right on down, you'll see that these are their top 10 holdings. They hold Apple shares in Apple, 11.24%, Microsoft, Amazon, Google, Facebook, Google, Applet, Intel, Cisco Systems. So what a fund is if you don't want to pick your own individual stocks, you don't want to research Ford and Regions Financial and General Motors and Noble Energy. You want somebody else to do all the research for you. You trust that they're going to make you money. You buy shares in their fund. And a lot of these funds will pay monthly dividends, it seems like. We'll go to the dividend page. Of course, if this tab is not on what I'm looking at, I don't look very long. Right now, they have a 9.28% yield. That's almost a 10% return on your money. That's a pretty nice interest rate, if you ask me. They pay 19.5 cents per month. They're a monthly payer. That's always good news. You can compound your money faster. Some people will actually use ETFs and not actually buy back into the ETF, but take their monthly dividend from the ETF and buy other stocks with it. So either way you go is still compound investing, because you're taking the interest somebody's giving you and reinvesting it in something else that's going to make you more interest. So that's the basic overview of an ETF. We'll, of course, look at their dividend history, of course, because I'm always going to look there. So you will notice they kind of bounce up and down a little bit, but they're always around the 18% or 18 cent per share mark or higher. So that's just kind of normal out of a fund to do that. Here you can actually see what they paid, 17.5 cents, 17.6 cents, 19.5 cents, 22 cents a share. So they're around that 18 cent and higher mark, and they are paying monthly. That is an overview of an ETF, which stands for Exchange Traded Fund. A lot of new early investors might want to get into a couple of ETFs. There's people out there that don't like to actually do the research to pick what stock they think is going to do well. But on the other hand, there are a lot of people out there who say, you know what, I want to invest in this company. I like what they do. I like their outlook. I don't want to pay a management fee to somebody, which that management fee is taken out before you get your dividend. It's actually part of the cost of their running their company. So you might even actually say exchange traded fund is like an investing company, and you're buying shares in it. So it's a good way. I have several ETFs in my portfolios. I use them as kind of that monthly income to boost buying other stocks or bonds that I want in the future. Let's take a look at a stock. A stock would be like Regions Financial. They are a banking company. When you buy stock in Regions, you're not buying stock in a bunch of holdings. You're buying stock in Regions. You are planning for Regions, CEO, and board of directors to make a profit and keep their costs low and share that profit with you. You'll notice on the tabs here, ratings, key data, earnings, dividends, value, growth, profitability, momentum, peers, no holdings. They are the holding. There are companies, ETFs, that have holdings in Regions Financial, which means ETFs own shares of Regions Financial and they're in that fund. However, this is not a fund. This is an actual stock. Looks like they're trading at about $16.63 a share today. They're up 10 cents. That's good. They have a nice dividend yield of 3.72%. They pay out 62 cents a year per share, 40% payout ratio, so that's really low. They're keeping 60% of their profits back to expand their business. A 5-year growth rate of 35.69%, that's sweet. That's an indicator they're going to keep increasing that dividend for you. They're paying 15.5 cents per share. They pay quarterly. And oh, look, today's their ex-dividend date. And yes, I bought some today because I want to get a paycheck from them on January the 2nd, the payout date. We went over this a couple videos ago. So yes, I did invest some in them. I think they're going to be a fairly strong holding. They may bobble a little bit if we hit a recession possibly. But you know what? Recessions are not a bad thing for the dividend investor. And I'll get into that, just touch on it. We'll make a video of it in the future. Um, so let's go to, of course, the old fallback Ford Motor Company. They are what is a stock. They're not a fund. When you buy into Ford Motor Company, you are literally buying title or deed of Ford. They are down a little bit today. That red is an indicator to me to go ahead and maybe look at purchasing some because I'm getting more for my money. But look, their dividend amount, it's not in the red, it's not in the green, it's always what it always is. It's 15 cents per share right now. Very good. I like that. I like that money coming in every month, every quarter. What I like about Ford is you can see they had a little reduction in their dividend in 2002. Of course, this is the 2009 when everybody freaked out and was selling everything. But they've rebounded quite nicely. They've even had a couple of excessive bumps in their dividend. Here they paid their normal dividend of 15 cents per share, and then they added another 24 cents per share. Nice bump. Ford is a stock, not an exchange-traded fund. There are exchange-traded funds that probably own portions of Ford, and they've got them in their funds. So that's kind of the difference between a fund and a stock. Once again, if you'll leave a comment of a stock or a fund that you would like for me to maybe do some research on, put together a quick 10-minute video. I never recommend nor reject any stocks. I won't tell you to buy or not to buy anything. I'll go through for you. I'll give you a real nice research of the stock, kind of a history. I'll even look at their CEO for you, and I will give you the facts, and you invest how you feel like investing. I was talking to somebody the other day, and the truth of it is, if you're not making money while you're sleeping, you're going broke. Why do I say that? Well, when you go to sleep at night, your furnace is running or your air conditioner is running, depending upon the temperature of where you're at. Your refrigerator is running. Your water heater keeps heating water overnight. You pay car insurance on your car. That's 24 hours a day coverage. Every minute that ticks by while you're asleep, you're moving closer to having to pay that again. But one thing you don't do is you're not working while you're asleep. And if you're not working while you're asleep, you're not making money while you're asleep, but you're spending it. So having a nice dividend portfolio, a savings account dividend, I would recommend a Roth IRA for anybody that doesn't have one. The real nice thing is the money it earns over the years until you turn 59, tax-free when you start drawing it out. And if you get your dividend, monthly dividend right with a Roth IRA, when you turn 60, 59, you can simply start drawing the dividends and leave the initial investment there. And it's just like getting another check every month. Same thing with my savings account. It's really nice to all of a sudden, when I wake up in the morning and I check my TD Ameritrade account, oh, there's a deposit of $3 in there. There's a deposit of $2.50. So there is the potential to make money while you're actually asleep. This week I took a little bit of time. I started some Excel charts for tracking some stuff. This is my Roth IRA. This first chart you see here is actually a dividend tracking chart. The very first month that I got dividends from my Roth, which by the way is the first month I started it, was $32.65. I bought into a company. They pay 25 cents per share per quarter. And believe it or not, the month I bought into them, they give a $2 per share boost above the 25 cent. So I kind of like got lucky, hit the lottery on that one a little bit, if you will. I should have got about, I think $20, or I should have got like $2.50 from them, and I ended up getting like 20 something. And then the other dividends I made boosted me up to 36. Then the next month, my dividend amount for the next month fell to $5.21. You're like, oh my goodness. No, I still got the $32.65. plus I got $5.21 the next month. Well, for being in it my second month, that's not bad. I didn't even have $1,000. I don't think $2,000 invested in it. Um, so then in November, my dividends were a little lower because some of my companies, mostly that was monthly companies. This was quarterly that got me up here. You can see in December, we are at December 5th, and I'm already at $5.40 in dividends in December. I still have, 20 some days left in December to draw more dividends, and I have more dividends coming. So in a week or so, when we come back and check this chart, you're going to see this start to edge up. What's really nice is I'm going to get this monthly dividend amount. My goal is within 1 year to have this where I am getting at least $100 a month in dividends in the first year of having my Roth. That's my goal. We'll see if I make it. I might not. We go down here. This here chart is my deposits. You can see in August, I deposited $627 total. And in September, I deposited $488. If you'll look at that, in September, by the end of September, I only had $1,100 invested in my Roth IRA. But if you go up here and look in September, I got $32 in dividends in that very same month. So if you get down to it, that's a pretty good return in the first month. So anyway, then we go on. I had a real nice month in October. I was able to deposit $710 more. Back down in November, $425. Once again, you see December and you're thinking, oh my goodness, it's only put $120 in. It's only the 5th of December. There's still several weeks left. This number is going to come up each week as I deposit more and more money. I also come down here, I created this last chart in this one. This actually shows actual deposits of my money into my Roth, and it's accumulative. In other words, it's not just a month-by-month deposit. It actually shows the growth of the deposits over time. This blue line down here is my dividend. It doesn't look like it's coming up much, but as you can see already, from September to December, I've made $45.65 in dividends as my account continues to climb. So this is good news. Now, if you look right here, this is saying I have $2,420 in my Roth IRA. You could add this amount to it. You would come up with a $24.65. That's what the actual money between what I've deposited and what I've made in dividends on my Roth. However, when I look at it right here, right now on my other computer screen, my account value is $25.6703. So there's about a $100 difference to the good there. That is simply capital gains. That's saying my account's worth that. To me, the main thing I'm seeing is my account's worth this income coming in every month. That's what I want to base my worth on. Not what, because of some news story, it's up today, news story, your account value is now at $2,200. Okay, but my true account value is how much money it's going to make me each month, every month, continually being put in my pocket. The other thing I want to talk to you about real quick is I want you to think of investing like getting a new job. When you first go to work somewhere, you don't make the big money. You don't make journeyman's rate when you first go hire in somewhere, or whatever the industry is called after you've been a veteran's rate. So when you first hire in somewhere, you make low money. You make the minimum money because you don't know how to do the job yet. You're still learning. You don't have much invested in your time at that company. Over years, as you start to invest more and more of your time, you become more and more knowledgeable about the work. They give you a raise. They give you bonuses. They like what you're doing, so they move you up on the pay scale. Long-term dividend investing is very similar to that. When you first start, you're getting the small amounts, the $1 here, 50 cents there, 75 cents here. But as you continually invest in that account, in that job, if you will, you put a little more money in, you buy some more stock. You put a little more money in, you buy some more stock. That stock gives you a dividend, it buys you more stock. It's just like a job. And the longer you hold that job, the more valuable your knowledge becomes, the more money you begin to make. So we can go here. I've created a deposit page where I can actually see how my deposits are going in: 120, 107, 200, 320. I try to always put 120 in every week, no matter what. Now, you'll see here I put $20 in on the 10th and then 120 in on the 11th. I seen a potential buy because the market, one of the stocks I was in, took a dip, and I could buy like 3 shares for $20 when it was normally $15 a share. So I threw an extra $20 in there above my normal, just because I seen a red light come on and I knew it was a buy. We can go over here and look at my dividend page. So remember I told you I got that bump in January. It was $26. The same company paid me $3.25. That would have been my actual dividend, but they had a real good quarter and they added $2 a share to everybody that already had shares. So that was the big bump. But you can see, I mean, I'm getting like $3.40, $1.11, $2.31, $1.79, 89 cents. People are like, 89 cents? That ain't worth your time. That's 89 cents now. I plan on that going up. DNP $1.50, GLQ $1.05, 90 cents, 3.45. That was just a couple of days ago. So, like here in December, I've only got 3 dividend payments so far on my Roth IRA. That's early. I probably got that times 3 more coming. So I probably got another 9 deposits coming this month. I could go to look at my calendar and tell you. So this is one of my tracking charts for my Roth. This is my savings account one. You can see that it's kind of all over the place right now. Started in August with a $25 month, that month of dividends. September was a banner one, $61.89. October, I didn't have a lot of holdings that matured in October that paid their dividends. But if you actually look at this, I'm averaging more than $8 a month already. Matter of fact, I've got it on my page right here. Since I've started investing, I've deposited $41.40. I've withdrew $31.90. I told you I had to pay off a little bit of debt, some credit cards. My dividends have been $115.67 since I started investing. That's a percentage of average return of 2.79%. That's kind of low. Yeah. I also got to remember I pulled out quite a bit of money there, so I lost those dividends for the next month. If I was to divide my dividends right now, the 115 by 12 months, right now I'm averaging $9.64 a month that I have as extra income. If I divide it out over 12 months, but it's only been 4 months. If you divide my dividend amount by 4 months, I'm actually making $28.92 a month in the first quarter of my new job. This new job where I'm not required to go somewhere, I'm not required to travel away from my home, I'm not required to get out and physically work in the snow or the rain or climb towers or go in a factory every day. I'm not required to do any of that. Actually, there are people out there doing that, and I own part of the company that they work for, and that company's paying me as the owner. So in the first quarter, I'm already making $30 a month. You can see it that at my account, at its highest value was $41.40. So when people are saying, well, I don't have $10,000 to invest, it don't take $10,000 to invest. I don't care if you start with $3 a week. Get you an online trading account open. Get it linked to a bank account. Start putting your money in there. You can just put it in there. They pay interest just like a regular savings account. Most of these online trading accounts, they call them money markets. Anyways, they pay interest. It's a good way just to have a savings account there, if you will. So if you're not doing this, I don't understand why you wouldn't. It's easy money. So anyway, this is my dividend chart, of course, just like the other one. Here's where I'm tracking deposits in the blue. This was actually deposits and withdrawals. You can see how it went up and down. Oh, it went way down here. Paid out in December. She's already coming back up. This is the balance. So you can see, $0 in May, $690, $1,600, $3,200, $3,700, $4,300, and then I dropped it down to $928 because I used some of that money. Just the way it is. So that's kind of these charts. I'll be more than happy to help you build one. You can actually go on videos on YouTube, and there are people that show you right how to build it. If you've got any questions about that, I also will help. Once again, I'm always asking if you like my videos, if they're informative, if you think that they're helping you in some way, please hit the like button. It helps my videos get pushed out more and more. Let's reach some people like you and myself. Let's get other people interested in understanding that there are two ways to put this. There are people that get up every day and go to work for money. The three key words is work for money. They actually trade their time to make money so they can buy groceries and pay their light bill and whatever it is, get their kids new shoes. Then there are people that get up and put money to work for them. So you can go to work for money, or you can make money work for you. I like making money, which is nothing more than a tool, work for me. Money does not bring you happiness. However, money is a priority in our life. We have to have it to buy food, pay our bills. So if I can get another stream of income coming in that I don't have to get up at 5 o'clock in the morning and drive somewhere, spend time away from my family, and I'm going to make money from this, why wouldn't you do it? So if you have anything you want me to make a video about, we can go over different of the Roth IRA versus traditional IRA. The other thing I want to remind everybody, don't let the fox guard the hen house. I have experienced some people lately who invested in a IRA. They give their money to these people. They were going to invest it for them. The people actually, the only thing they invested in was CDs in their own bank. In over 15 years, they literally didn't make these people $300 over what was it? 14 years, they made less than $500 on a $5,000 deposit into their Roth IRA. So don't just assume because you're giving somebody your money and they're putting in a certain type of account that they're actually going to make you money. Watch your own money yourself. That's my advice to you today. Please subscribe to my channel if you want to see more videos. Hit the like button. Put a comment down there if there's a company you want me to research for you. I'll be more than happy to do it. Thank you. Have a good holiday season. I'll be talking to you again in a few days.